couple of months of this market run without any correction at all. So when you kind of sort of stretch in one side, it's natural to expect the market to, rebound, maybe give some corrections, etc. So it's too early. It's always, unless you're in the midst of it, it kind of is pointless to kind of call a market top or a bottom, as they say. But it makes sense to be aware of what's happening around you, which could trigger a turning point, maybe even for the short term. But if you're trading the market, I think those are important to track as well. So what I'm doing is putting out one indicator which I think is useful, could be useful. That's the US 10-year Treasury. I'm talking about the yields. So what happened yesterday kind of could be an important indicator. So what happened? You had the FOMC minutes which were released, which were hawkish. You had the private payrolls number, the ADP number, which was much stronger than what was anticipated. And well, yields continued to fall. Prices, which are inversely correlated, opposite, they actually rose. The US 10-year, the yields, which at one point had gotten to about 2.65, are now almost close to breaking their YTD lows. So that's about 2.35 or so. Now that is interesting. One could kind of argue and say that a lot of the move is already has already happened, and this is just a pure technical kind of a correction. But you also throw in the news-related aspects, which is the fact that people are now getting a little sort of wary about betting on imminent tax reform or healthcare and things like that. And you may kind of see if the 10-year breaks the YTD lows, actually heading even lower, which means the bond prices rise. Bond prices and the S&P, for example, you can go back in history, they're absolutely, completely inversely correlated. So as bond prices rise, the US market, stock markets come under pressure. And if that happens, that's the big mother market, you will start to see pressure on other markets as well. So as I said, not to say this is calling for any reversal or anything of that sort, but makes sense to be aware of what's going on and keep that at the back of your mind if you're in the market for the short term and you don't want to get caught on the wrong side. We've had now this market running up 4 months without a 5% correction, and that is unusual.
Yes.